G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm your host, Aaron Christie David, and I'm thrilled each and every week to bring you a guest, someone that we call best in breed, so someone that is a real specialist in their area of expertise, someone that we can come in, ask a lot of frequently asked questions that we get in my day-to-day role as a mortgage broker and founder of Atelier Wealth, where we specialize in helping property investors start up and scale up their property portfolio as well. Today's guest is a very good friend of ours. I've known Nathan Hogan for quite a few years, seeing your business go from startup to incredible growth as well. Super proud to have you in the studio with me as well. G'day, Nathan.
Thanks for having me.
Mate,
good to see you.
Pleasure. Yeah, great to see you, mate. Thanks very much. I know a lot's happened in the last 4 years since you've launched your business called iFin Capital Group, and want to take everyone on that journey as well, from not only your personal growth, family growth, stuff that's happening off the field and on the field, particularly from a football perspective as well, which we'll touch on in a second, and kick off. But yeah, the flavor of today is very much talking about different types of funding. So quite often we have clients that are self-employed, they have companies, for example, their needs become sophisticated, and that means they need a broker that's playing a little bit more of an elevated game that understands their specialist needs. So it's not necessarily a property conversation, it's very much a holistic finances conversation, but I think it's one that's super, super important for people that are self-employed that they need to have as well. So welcome.
Thank you.
Mate,
Thank you.
What I call the 3 Ps, a bit about yourself personally, professionally, and a bit about yourself, what you guys do from a property perspective.
Yeah, obviously started iFin Capital 4 years ago, but that's on the back of being in the finance industry and banking since 1999. So,
all right. Just a couple of years under your belt then?
Yeah, I'll definitely look at it. But I suppose from our point of view, I've co-owned it with Joshua Wheeler, so he's come with a mountain of experience as well.
Great. Love business partnerships, right? Like it's good yin and yang energy.
Yeah,
actually.
That's right. Yeah. We both have different skills and different strengths that we bring to the business. And we're lucky to pick up a few awards and have a bit of success here and there.
Speaking of awards, current rating Asset Broker of the Year, I mean, that's no easy feat given that asset finance is not only highly competitive, but highly specialised as well. Yeah,
that's right. Really honoured to pick that award up last year. We're just about to do a bit of a roadshow on going out to meet new clients on the back of that. So we're really excited about that as well. Away from the business, I'm quite busy. I'm actually the head coach of Manly's reserve grade side as well, out of Blacktown Workers Seagulls.
Mate, you said it so casually at the moment.
So I've got a lot on my plate at the minute. So that's been quite challenging as well. So I really enjoy that away from finance. It's a really good release for me to have other interests. And I think... it also helps me be successful in iFin Capital. So,
And speaking of success in iFin Capital, I mean, you're very lucky that you've been able to partner and bring on Tommy Turbo. So tell us a little bit more about that association and how that works as well.
Yeah, sure. Obviously, Tom Trbojevic, everyone calls him Tommy Turbo, just won the Dally M Award last year, actually, the best player in the NRL. So we're really lucky to have him on board. Conversation came out quite organically, actually. We do a bit of community stuff with iFin Capital. We sponsor junior sporting clubs and the like, and we sponsored my old rugby league club, the Mona Vale Raiders. So Tom and the whole Trbojevic family is from Mona Vale Raiders as well. And we're at a sponsors dinner, and his dad basically came up to me and said that Tom needs to have some other interests away from football. Can we help him out? So
he's had a good career on the field, though.
Yeah, we were really lucky to pick up that opportunity.
Well done.
And so Tom, football is his absolute priority, but he's doing a double degree as well.
It's incredible.
So we've been helping him a little bit along with that, and outside of that, we've helped him pick up his first industry qualification.
Fantastic.
Through iFin, and then he's been out to see a bunch of clients, and we had a great charity day actually in November last year up in Newcastle. We had 170 people come and support a business luncheon we had there for Lifeline. So, a really, really good initiative. Raised nearly $32,000 that we to help out the guys at Lifeline there. Obviously, lots of challenges with COVID and business interruption, and obviously the recent weather events are going to add further to those needs in the community. So,
it's perfect storms, not a fair way to say it, but businesses that survive bushfires, survive COVID, and then it's the floods that have almost knocked the wind out of their sails, isn't it?
Yeah, that's right. And look, there's a lot of challenges in there, but I think when we're looking for business owners, especially family businesses, they definitely need the right people around them. And I think that's sort of where we tie it back into the finance side of things. You know, we helped a client last year that had real troubles with COVID. They lost a lot of staff, they lost a lot of contracts. It was really interrupted, and we ended up refinancing their whole business for them.
Wow.
And essentially saving them nearly $80,000 a month by doing so.
That's incredible, mate.
And now they're on a journey of growth trajectory again. We're looking to hopefully double their business in the next 3 years. So we work with clients on long-term partnerships. We're definitely not fly-by-night. Yeah. And all the clients we do bring on, we're always working to a long-term strategy around where they want to be, what they're looking to do with their business. And obviously the SME space is huge in Australia.
Yep. Huge, but also massively under-supported from what I've seen.
Yeah, under-supported too. And I think that's where, you talk about home loan brokers or mortgage brokers being involved. I think we were talking about it the other day, but we really need to be understanding what the true needs of the clients are.
Yep.
And if we do understand that, it definitely bodes well to have the right expertise in the room and having the right people on your side of the table when negotiating. So, we've seen our role morph from just, hey, I need to fund this crane or telehandler to what's our long-term strategy? How are we going to do this? I've got personal wealth goals and all that. So we help with all facets of their business.
And it's the notion of a generalist. So someone like a mortgage broker can be quite generalist and trying to maybe dabble in a little bit of the commercial asset space versus the specialist. And so if you've got a lump on your back, you probably want to go to a specialist. And it's the same for someone that has a little bit more sophisticated or niched needs, that they need to go to a specialist rather than a generalist, right?
Yeah, that's right. And we've got a lot of industry expertise and we've got a lot of knowledge that can help you navigate lots of different challenges that are presented with trying to grow. And especially if you're in trouble as well, there's lots of ways to help and save and adapt and find new channels. So one of the biggest things recently we've been seeing is sometimes they are getting a little bit of poor advice, or a mortgage broker's trying to help them the best they can.
Yeah, best intentions.
But absolutely. But they're finding that they get into trouble. They might get some bad advice on structuring and things. So a real simple example of that is we're seeing a lot of the bank appetite at the moment really sort of looking to push into collecting more and more security. So if you're a mum and dad business and you've got your car with them and your home loan with them, but you want to buy a new machine or you want to double your business in size, they always try and tie in your residential property. Or
banks love resi property.
They love it. So they love it because they see it as a safe haven. So one of the main issues with that is that if you do get into trouble later on, they've got full control of all your assets. Now, we actively have those conversations with lots of our clients around structuring family wealth and private wealth away from the business wealth and looking at trying to basically create it. So ultimately, you can make your own decisions of where you want to be and how you're going to secure your business loans and how you're going to control your future.
So and that's really interesting differentiation, because most people just kind of lump it all in. My personal wealth is tied into the business. My personal wealth is tied into my home. What's the problem? They can all see it. It's all intertwined, and some people have almost used their business like an ATM as well. So right, so it's almost going. These are very clear lines.
Yeah,
this is your personal, this is your business, and this is your long-term, maybe shares, assets, whatever you've got for long-term.
Yeah, absolutely. And I think through sometimes the lack of poor advice, but some lack of effort too. Like when it's easy to do it, sometimes it is easy just to go down that route. But long term, if things change or the market goes against you, like I'd hate to be a business at the moment that is flood affected and COVID affected, and all your family wealth is tied into your loan structure. If your business can't survive that, your house is more than likely going to be wrapped up in it one way or another. So it doesn't make you sleep easy at night, and it can create a lot of challenges for you. So our main goal when we're giving advice is really we go and meet the client, we sit down with them, and we really try and get to know the business inside and out.
Yeah.
And then on the back of that, we look at structuring. So we always say we're not emotional about where we get our money from, as long as it's beautiful. The right price and the right structure.
Yeah. Honestly, who really cares where that money comes from? It's or how it's wrapped up and which brand it is.
You do hear, I've been with
NAB for 20 years.
Yeah, NAB, ANZ, CBA, Westpac. My whole family banks there. Why would I leave?
Yeah.
It's great to be romantic about that sort of stuff. Yeah. But at the end of the day, if we're being really serious about protecting you, your family assets and your own private wealth, what can we do to help you, and how we structure it makes all the difference in the long run.
Let's go back a step, because quite often for businesses to get their start, home equity is probably the easiest place to start, right? You're starting out with your business, your financials are not the greatest for probably at least the first 1 to 2 years. There's a lag on when you can use those financials. So the home becomes the easiest source of funding to then go towards contributing towards your business. Now the business is now starting to hit its straps, and now it's like, now you've got a few more options. But that initial kind of those growth phases, the startup, then kind of growing the business as well. Take us through some specific options around funding for someone that's maybe in those situations.
Yeah, so look, there is some great options. If you're a homeowner and you're looking to grow, sort of anywhere up to 250,000 you can get from multiple banks, basically because you're a homeowner and you have some equity in there. Now, that being said, they don't tie the home into the loan. It just shows that you have the ability to build equity in things.
Yeah, okay.
And that you are well-heeled and you're not going to disappear overnight.
Yeah. So is that what you'd call, say, a business loan, like in really simplistic terms?
So especially in equipment finance.
Yeah, okay.
Lots of lenders have a low doc process for anywhere sort of 150 to 250.
Yeah, okay.
And on the back of that, you can really get some quick growth in 12, 24 months and thereafter. And it also gives you a lot of control around your decision making. As we said, if you went to your regular bank, they would definitely...
they'd want to bring the asset,
bring the home in and try and take a whole charge over the whole business and all of its assets. So we also try and negotiate away from those as well. So.
Yeah, okay. And these, tips and tricks for new players, isn't it really? Like innocently 100%. You'd just go and go, okay, this is what the bank's saying. It's got to be that way. Whereas someone with impartiality is going, doesn't necessarily have to be this way.
Yeah, and I think too, like all relatively small businesses and whatnot, most of the time, family businesses, you're always working in it and not on the business. And that's where the quick decisions made of, let's just take it, it's quick and easy, or it's this and that. Whereas sometimes those decisions come back to plague you later on. And we're really proactive in that space because we do see people get hurt by it. And that being said, obviously we want to get the best deal for you in the market. And if it is the best deal, then and you feel comfortable doing it, we'd always recommend to go with that. But it's more of a strategy thing for us, is to say, well, if you're looking for long-term sustainable growth, you do need multiple funding partners.
Yeah, okay.
And if you are working on your business and working in it as much as you are, then people like iFin Capital are perfect for you.
Yeah, great.
We can do all of that legwork for you and come back to you with recommendations and go and seek the approvals, get all the documents, do it all for you. So
yeah, lovely. So if we go through a couple of those options, and people may hear this, for example, maybe in passing or see it when they look on, when they search commercial loans or business loans, there's a couple of specialized type of funding lines, like called trade debtor finance, for example, invoice finance, cash flow finance. Take us through like a couple of those, for example, that you've worked on where they're right for a business and what type of businesses they suit as well.
Yeah, debtor funding or cash flow finance or trade funding. Yeah. It's all based off sales that have made, like sort of pre-made sales. So if you've got $1 million worth of invoices, most lenders in that space will give you up to 80% of that, so they can prepay you the $800,000.
Yeah,
and out of
that might be cash flow, but they're not payable for maybe 90 days.
Yeah, example, it's normally for people with a long cash flow cycle. So if you bill end of month and then your payment terms are 60 days end of month, from day one to when you get your dollar in the bank, it might be 90 days. Now, that's a long time to cover inventory, staff wages,
rents,
build costs, all your overheads. So it's a great product for that. And sometimes you can actually use it for particular projects or instances. So if you are looking to grow or you've got a real niche that you want to grab a hold of straight away, there's a great opportunity to do that.
Yeah, great.
So that does bring forward your cash flow or future earnings. It brings it into the now.
Yeah.
But it does come at a cost.
Yeah.
So it's different to an overdraft.
Yeah.
Where an overdraft, normally they would always take bricks and mortar security.
Yeah.
And again, you're on that, your home's tied in or whatever the case is. So cash flow funding can be a real tool to use to your advantage, and it can really help you grow at accelerated rates.
Yeah, perfect. And then we come to, I guess, industry specific as well. And this is where I guess you guys have really earned your stripes with working with certain types of industries and the mechanics and little quirks within those industries. I know one's probably mining. I know we had a chat a little while ago, and globally this can be impacted. Foreign exchange can impact you as well. So there's, I guess, a couple of headwinds that can change the course of a business quite quickly as well.
Yeah, there's a lot of headwinds at the moment, in particular in thermal coal.
Yeah.
And obviously that's thermal coal is the coal that's used for energy production or turning the lights on.
Yep.
And essentially all the main banks in Australia are really losing their flavour for that. And that's presenting a lot of challenges in that space.
Yeah.
But it has a lot of downstream challenges as well. For anyone in those towns or sectors, there's all sorts of impacts in funding lines. So it's a good time for us to be involved because we have a lot of industry expertise in mining in particular.
Yeah.
Like at the moment we're doing we're funding a big equipment deal for like $56 million into a gold mine. So we're really active in that size and that space. But we also go all the way down to mum and dads who are looking for a new car or whatever else they may need. So we're quite diverse and quite unique. But again, there's other things like understanding industries really well. Like if you're in the forklift industry, understanding when machines can need to be rebuilt and what all the mechanics need to go into that. So if your funding lines are chewed up with sort of older machines, and you're probably looking to sell those, there's ways and means and structures that we can come up with that make a lot of sense to help the business owner basically achieve the best result.
Cool. You mentioned before about, say, mum and dad and the asset, the car finance, for example. And one that comes up, because from my perspective as a broker, car leases can often impact borrowing capacity, right? It gets taken as a liability, which is cool. We work with it and use those numbers again. But one thing that kind of always pops up is, should I use equity or do I get dealer finance? And one of the dealer finance hooks is the 0% interest rate or like a really low interest rate. I'm like, a lot of people ask me, well, what's up with that? And how does that work when the dealer says it's a really low interest rate or 0% finance? There's got to be a catch to it, right? So from your perspective, is that a good deal or is there a catch to it as well?
Dealers generally do that because they're overstocked in a certain asset class that they want to get rid of. But also nothing's ever for free. So 0% with all the asterisks next to it. When you add up the purchase price and divide it by, say, 60 months, it'll work out to be 60 even payments of what it was. But essentially, it's a thing they call blind discounting, where basically if you negotiated a cash price for the car, it would have been way cheaper to buy it with cash rather than fund it at its full amount. So you can generally get a better deal elsewhere if you just negotiate the price of the asset and then go to another funder. It'll normally work out cheaper to do it that way. Also, dealers, they always love signing you up. Just sign here and you can have the car today sort of thing.
I mean, it's always highly emotional.
Yeah, especially, if you're looking for the family 7-seater and the kids are there and you've got to sign now, otherwise you're going to miss it. It's always all those dealer tricks are in there. So it always pays to take a deep breath, take away the payments and get someone to have a look at it if you're not an expert in looking at the payments, because sometimes they'll be telling you it's definitely 3.95% and we can tell you it's definitely not.
And then another one that catches people as maybe the balloon cost of the residual at the very end as well, which then they haven't really factored out when they got excited.
The large lump sum that's due at the end. So it's a balloon or a residual value is what it's normally described as. Which essentially means at the end of your 5 years, in a $100,000 car, you still might owe them $20,000. Now, if you sell that car in a market that's dipping and it's only worth 10, you still owe them 10. So there is a few tricks in there, and we always say even if it's in your individual names, it's different again, but we're always dealing in the commercial space. So if you've got a business, put it in the business name and run it that way. It normally works out better for you.
Great. And then you just mentioned there about touching on, say, business and having in the business name, for example. So, I mean, obviously asset write-off is quite popular. But if it's for business use, and so business versus personal use, how do you guys make that distinction when you're
normally it's up to their accountant to advise them on that.
Okay.
So our advice is just more around the funding structure and how we would like to do it.
Yeah. Okay.
But essentially, whatever percentage you're using for personal versus business is how much you can claim of the repayments.
Yeah. Okay.
Or depreciation and interest
Cool.
as part of the asset. So I suppose it's always a big decision, or you're excited about it, but definitely always take a deep breath and have a look at the real dollars and cents in there, and reach out to people that can help.
Yeah, nice. And then talking about the other strings to your bow when you're working at iFin. So take us through, like, I'm a business, I'm in a growth mode, for example. What are some of the good questions that you'd be asking a client when you're saying, look, we're here for the long term, we're here to partner with you, for example? Are you often dreaming bigger sometimes than the business owner is? Or where do you see
it always
some
comes back to the easy question of, what are you doing this for?
Yeah.
And are you building it to sell the business, or are you building it to have your whole job have families? Your whole family have jobs?
Yeah.
Or are you building it just to have a place to work for yourself? Some people buy a franchise thing so it gives them a job.
Yeah.
They feel like they've got financial and time freedom.
Yeah.
But ultimately you're still tied to that job.
Yeah.
So it really depends on the individual's goals and where they want to be in the long term. So we always dig deeper and deeper and deeper, and we always ask, tell us more. And eventually you'll get to a spot where we can basically say, well, this is what we would say is a really good plan for you. And then we build it into immediate goals, short term. So, what do you need right now?
Yeah.
Short term, sort of next 12 months, and then sort of 3 and 5 years, and then we leave it there, sort of thing. So things can change a lot, as we've seen in the last 2.5 years.
Totally. Continues to. I think one thing we've learned with business, even people in any type of role, it's like change is the only guarantee. It's the only constant at the moment, right? Just be prepared for.
Yeah, be resilient and be ready for change. That's got to be the message for every role that's out there.
Isn't it?
But yeah, look, I think in particular too that the banking sector is evolving a little bit as well. There's more and more of their book is taken up by broker-introduced transactions. And the way their funding structure is and all of that, I think it's leading to having more and more independent advice, and those deals coming to them via an intermediary, I'd say, is a lot of the goals that they're looking at. So for people that are out there that are, have a small business or they're looking to grow, there's definitely some great people around that can help you grow. And
sometimes some businesses, look, they don't want to take on debt. Like, look, we don't want to take on any debt, for example. That's a very noble type of idea and great to kind of fund it through cash flow. But have you seen businesses that maybe have had that mentality going, look, we don't want to take on debt. We'll just kind of grow organically, for example. And you've seen other businesses that have come out of the side going, they've embraced some level of debt, and it's debt for growth as well. Have you, from your experience?
Yeah, we see a lot of that. One of the conversations we have a lot of is, if it's depreciating in value, use someone else's money. If it's appreciating in value, like if you have a great property opportunity and you've got lots of cash around, then sure, go for it. Yeah, again, it's about using the cash wisely, and then also setting themselves up to say, well, what are your goals? If you are looking to acquire or start a new branch in another state, or buy the neighbour's property next door, or whatever it may be, really trying to understand what that cash can be used for. And if you're looking at depreciating assets, that asset will still have a value to be resold later on, even though you might have written it off in your accounting books, for example, over 5 years. So there is still equity that you can still hold on the balance sheet there for a business. We have seen a lot of companies where they've, you look on their assets and their assets have diminished quite a lot, but you go, you've actually got 200 machines. And those machines still have value, but for accounting purposes, they've been reduced to reduce profitability. So, and obviously taxation, minimisation strategies there. So for us, it's really, you've got to get in behind the numbers, get in behind the detail.
Definitely.
And keep having those conversations with them.
Yeah, you're definitely playing those grey areas, isn't it? Because there's almost 3 sets of financials. There's one for the ATO, there's one that's the actuals, and one that's going to try and get finance approved as well, right? Yeah, well, everyone plays off the same financials, but it's about how you communicate that. And we're storytellers. We tell the story of the business and what's happening behind the scenes. Yeah. We just don't take face value. That's why we always say,
show us your asset register, show us this, show us that. Hold on, you're only claiming this much in depreciation. What's the story here? And then that leads into conversations around, is your fleet aging? Is it right for sale? Is it right for purpose?
Yeah.
What can we do to help you get, the average age of the fleet down, for example, if you're looking to sell, which is normally a big factor.
Yeah, nice. Mate, excellent. It's I love having these conversations, especially around the business side, business lending, business, because we see there's so many small businesses. This becomes their Achilles heel, right? They want to grow, for example. They're stuck on funding for growth. They're unsure about how to do it. Then they get stuck about what's a higher rate compared to my home loan rate. But it's like, well, you're going to make far more money or profit or revenue off the back of this growth and whatever it costs to play. But it's a bit of a mental crossover for some business owners to go, this is a price to pay.
I can get my home loan at 3%.
Yeah.
So but you're buying a used dump truck. It's not real estate, it's security. The lender in a lot of cases for us is only taking that asset as their security. So pricing in for risk is a big factor there. But there is a bit of a mental leap if people have been using their home loans to fund their business. There is a bit of a mental leap to sort of move to that world. But ultimately it goes back to our original conversation of setting up the business the right way and having longevity and making sure it isn't tied in to your properties and whatnot. So
definitely. It's very much like investing in property. Where you start, what got you there won't get you to that next level.
Yeah, that's right.
So your needs, your lender usage, that will change as your portfolio gets bigger. It's the same principle applies to small businesses. What got you here will not get you there. The funding that you had originally to bootstrap the business, for example, won't get you to that next level. And I think the other part is what we've seen some businesses is now they're in this holding pattern of, do we grow or do we stay where we are? And growing generally requires some type of investment into the business, but they're just unsure about how to fund that type of growth. And that's where someone like yourself comes into it.
Yeah, 100%. Yeah. And if we feel it's not the right decision for them, we will advise them that way. We're not about quick wins or anything like that from our side. We want to be a hand-in-hand partnership for a long time. So,
I mean, it has to be win-win, because there's no point you guys winning the client. You don't have a client for life then, or you don't have someone that's going to return and want more funding or their business succeeding. And now you haven't got someone that's high performing. You want to work with high performers.
Yeah, and we have that win-win conversation all the time around, fantastic. Are you winning? Is it winning towards your goals? Is it just a short-term one that's going to hurt you in a little while? So, all great conversations to be having, that's for sure.
Wonderful, mate. And this has been a great conversation. Thank you very much for joining us. Really appreciate it. And if you do want to reach out to Nathan, Hogan and the team at iFin Capital, we'll include their details in the link below. And mate, I have a very strong feeling that we'll get you back in the studio at some point in the future, have a chat, see how things are going with the footy field as well in the footy season. Mate, best of luck to you and the reserve grade team as well. We're having a chat before about kind of what that means for COVID and what that means for players as well. I'm sure that's an interesting conversation you guys are having at Coaching HQ, right, at the moment.
Yeah, lots of challenges ahead, but we're more than certain we're up for it.
Yeah, so. Great. Well, best of luck for the season and best of luck for your business as well, mate. Thanks very much.
Thanks for having me.
Wonderful.
Cheers.
That's been another episode of the Australian Property Investment Podcast. I hope you found that helpful. And if you have, please leave us a review or drop us a line with some comments as well. And until next time, take care.